Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hiding in plain sight within corporate filings. And trust me, this latest report from DeltaSoft Corp is a real page turner as we try and figure out if this company is soaring like a rocket or sputtering like a faulty engine. We are diving deep into DeltaSoft Corp's quarterly report. Now, this document gives us a snapshot of the company's financial health and operations for the period ending the 31st of December 2025. Before we jump into the nitty-gritty, if you love getting the real story behind the numbers without all the corporate jargon, make sure you hit that subscribe button, and remember we have a fantastic community over on Discord, linked in the description, where we break down these filings even further. So let's get started. Alright, let's kick things off with the balance sheet. This is like a company's financial report card showing what it owns and what it owes. As of the 31st of December 2025, DeltaSoft Corp had total assets of about $64,589. That is down from over $82,000 back on the 31st of March 2025. Now, what is driving this drop? We see cash took a significant dive, falling from around $38,000 to just over $12,000. That is a pretty big chunk of change to disappear. On the other side of the ledger, their liabilities, what they owe, also decreased slightly from roughly $43,000 to about $40,000. This drop in liabilities was mainly thanks to paying down accounts payable, which went from over $32,000 to around $21,000. So while their debts are shrinking a bit, the shrinking cash balance is definitely something to keep an eye on. Now let's talk about how the company is actually making money or losing it. This is the statement of operations. Looking at the 9 months ending the 31st of December 2025, DeltaSoft Corp brought in revenue of about $21,673. That is a pretty substantial drop from the same period in 2024, when they earned over $36,000. The company says this is because fewer customers are using their services. Ouch, their cost of goods sold, which are the direct costs to provide their services, stayed relatively flat, around $8,000 for 9 months in 2025, compared to $7,000 in 2024. But here is where things get really interesting. Their total operating expenses shot up from about $16,500 in the first 9 months of 2024 to a whopping $29,000 in the same period of 2025. A big part of this increase comes from something called amortization, which is spreading the cost of intangible assets over time, and a surge in professional fees. Because their revenue went down and their expenses went up, their net loss for these 9 months was over $15,000, a stark contrast to the $12,000 profit they made in 2024. This is a classic case of revenue shrinking while costs are ballooning. Moving on to the statement of stockholders' equity, this shows the changes in the owner's stake in the company. As of the 31st of December 2025, the total stockholders' equity was about $23,697. This is a decrease from over $39,000 at the end of March 2025. The main reason for this dip is that accumulated deficit, which represents the total losses the company has incurred since its inception, grew significantly to over $16,000. This means that since they started, the company has lost more money than it has made. The common stock itself, with a par value of just a fraction of a cent, hasn't changed much. But when we look at the balance of additional paid-in capital, which is money invested by shareholders beyond the par value, that is about $34,500. That number has been stable. However, the accumulated deficit is the real story here. A growing pile of losses impacting the overall equity. Now, let's look at the cash flow statement. This is crucial because a company can look profitable on paper but still run out of cash. For the 9 months ending the 31st of December 2025, DeltaSoft Corp used over $34,000 in cash for its operations. This is a big jump from the roughly $14,000 they generated in cash from operations in the same period in 2024. Remember that revenue drop and expense hike we talked about. This is where you see the impact on cash. Their net cash used in operating activities is a significant negative number, meaning more cash is flowing out than in. On the investing side, they spent no money on investing activities in 2025, compared to spending $27,000 in 2024. This suggests they may have paused or significantly scaled back on any new investments or development projects in the current year. The financing activities show they received $8,000 in 2025 from financing compared to almost $23,000 in 2024. This likely comes from loans or capital injections. The net result is a big drop in their cash balance. Digging into the notes, we find out DeltaSoft Corp is a development stage company, meaning they are still in the process of establishing their business. They started in January 2024 and aim to offer it consulting and software development services. This next note, going concern, is a really important one. It basically means the company is acknowledging that it might not be able to stay in business for the next year. They have a significant accumulated deficit, limited working capital, and depend heavily on future investment capital to keep operating. While they plan to raise funds, there is no guarantee they will be successful. This is a big red flag for investors. Under their accounting policies, they're capitalizing software development costs. This means they're treating these costs as assets rather than immediate expenses. For example, they spent about $27,000 on software development in 2024, which they are amortizing over 3 years. They've also capitalized website and mobile app development costs. While this can make current expenses look lower, it is important to remember these costs are still real and affect the company's overall profitability over time. Here is another point of interest. The sole director has loaned the company $19,131 for operating expenses. This loan is unsecured, non-interest bearing, and due on demand. Related party transactions are always worth watching closely as they can sometimes benefit insiders over other stakeholders. Looking at equity, the company has authorized a large number of common stock shares, 75 million they have issued shares for cash and through an initial issuance to their president. The total shares outstanding as of the 31st of December 2025 were just over 5.3 million. Interestingly, the company reports no provision for federal income taxes. This is because they have a significant net operating loss carryover, which they've offset with a valuation allowance. Essentially, they have so many historical losses that they don't expect to pay taxes for the foreseeable future. Now let's hear directly from management. In their discussion and analysis, they describe their business as a platform for project planning and performance management, with a mobile app and some promotional websites. Their revenue strategy is based on marking up freelancer fees. They list several competitors like Upwork and Fiverr, which are significantly larger and more established players in the market. Their marketing strategy involves referral programs and paid advertising. For the 3 months ending the 31st of December 2025, revenue was about $11,500, up from $8,300 in the same period of 2024. They attribute this increase to a higher price project. However, expenses also rose, leading to a small net loss of $112 compared to a profit of $823 in the prior year. The story for the 9-month period is quite different. Revenue dropped significantly from $36,300 in 2024 to $21,600 in 2025. Again, this is blamed on fewer customers. Meanwhile, expenses nearly doubled from about $16,500 to nearly $29,200, largely due to amortization and professional fees. This resulted in a substantial net loss of over $15,500 for the 9 months in 2025, a big swing from the profit of over $12,700 in 2024. Their liquidity section highlights the decreasing cash balance and the reliance on external funding. They mention that current funds might only be enough to maintain their reporting status and that the sole officer and director, Andrei Novokatsky, may be willing to provide additional loans. But to be clear, there is no formal contract for this. Here is a crucial part about their internal controls. Management admits that their disclosure controls and procedures were not effective as of the 31st of December 2025. This means they don't have strong enough systems in place to ensure that all required information is properly recorded, processed, and reported on time. This lack of effective controls is a serious concern for investors and regulators. On a positive note, management is not aware of any significant legal proceedings either pending or threatened against the company. This is good news, as legal battles can be incredibly costly and distracting. Finally, in other information, the company states that no director or officer adopted or terminated a Rule 10b5-1 trading arrangement during the quarter. This is a standard disclosure related to insider trading policies. Alright, so what is the big picture here for DeltaSoft Corp? After reviewing this quarterly report, it is clear that this is a company in its very early development stages. The revenue decline is concerning, especially when coupled with a sharp rise in expenses. The significant drop in cash and the admission that their internal controls are not effective are also major red flags. While they are working on developing their platform and have a strategy, they are facing stiff competition from much larger, more established companies. The company's survival seems to heavily rely on continued financial support from its director and potentially future fundraising, which, as the notes explicitly state, has no guarantee of success. For now, DeltaSoft Corp appears to be a high-risk investment. with considerable challenges ahead to achieve profitability and long-term viability. What is your take on DeltaSoft Corp's situation? Do you see potential given their development stage, or are the financial and control issues too much to overcome? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more in-depth corporate analysis. And don't forget to join our Discord community for more discussions. Thanks for watching, and I'll see you in the next video.